You might be wondering how we got here. This, ladies and gentlemen, I know it's kind of hard to see. That's sort of the point, is what the Tesla stock price chart would look like. If Tesla stock reaches ARK Invest's expected fair valuation for Tesla 5 years from now, $2,600 per share, market cap roughly around the $8 trillion mark. Zooming in, this is Tesla to date, and this, as I continue to scroll and narrate, is what things would look like. I'm not even kidding. If Tesla got to that $2,600 per share mark 5 years from now. In this video, we're going to be looking at ARK Invest's valuation model, the actual spreadsheet, and boy is it a monster, that produces this expected fair valuation of $2,600 per share for Tesla stock in 2029. As I record this, Tesla stock is not even $200 per share. We're also going to look at ARK's scenario, which produces a $3,701 per share fair value for Tesla stock in 2029. It's literally included in the valuation model, so why the hell not? For those of you who don't know, the way that ARK values Tesla is through a Monte Carlo simulation. In other words, literally thousands of different scenarios, each weighted by probability, different possible outcomes for Tesla's future business, distributed from most bearish to most bullish, and their fair valuation is the figure smack bang in the middle, at the midpoint between the most bearish and the most bullish simulation. So first, we're going to look at their Tesla valuation inputs. Now, at the time this model was published, ARK Invest's valuation model has produced a fair valuation for Tesla of exactly $2,605 per share in 2029. The bear case is $2,006 per share. The bull case, $3,104 per share, compound annual growth rate of 63%. Wild. Now, some of the key drivers here, the autonomous EBITDA margin, as in robotaxi margins, minimum 20%. Downside scenario 40%. Upside scenario 60%. And the maximum scenario 80%. Like, these are software-like margins. Investors currently panicking over Tesla's short-term gross automotive margins, which are in the low teens. And just imagine, the same panic, oh no, Tesla gross margins are lower than I thought. They're not 20%, they're 15%. Just imagine what happens if a year or 2 or 3 from now, Tesla has a business, robotaxis, rapidly growing with margins in the 20, 30, 40, 50, 60% range. ARK also have some estimates for miles driven per robotaxi per year. The minimum 30,000, downside 70,000, upside 120,000, and the maximum 130,000. For context, a typical taxi does give or take around 50,000 miles per year. And that's a human-driven taxi, as in the human needs to eat and sleep and actually have a life as well. I'm going to skip ahead of many of these. Don't want to bore too many of you guys, but just some of the key points, some of the key assumptions. ARK Invest's minimum penetration percentage for each vehicle segment that Tesla enters is 5%. Their downside is 10%. Their upside is 15%. By the way, Tesla's share globally roughly around that 15% now, give or take. Correct me if I'm wrong. And maximum around 30%. Tesla insurance take rate minimum 0%. Downside 20%. Upside 35%. And maximum 50%. Now, I think over the ultra long term, Tesla insurance is going to be a no-brainer because they've got the data. They'll be able to price their insurance product better than anyone else, unless other companies are willing to take crazy losses and huge risk just to compete. Onto the ride-hail assumptions, which really drive this valuation model. Downside scenario assumes the robotaxis don't launch. The minimum worst case, no robotaxi launch. Downside, 30,000 miles a year per vehicle. Upside, 50,000 and maximum 60,000. I think these are pretty reasonable. Tesla's cut of profits from the human ride-hail platform cut. Now check this out. They are assuming that there will be human-driven ride-hail as well, not just autonomous robotaxis. Tesla taking 20% in the minimum, downside 25%, upside 40%, and the maximum, a 50-50 split. Now onto the autonomous platform. Tesla's cut here, excluding China, 15% minimum and downside, 25% in the upside scenario, and 35% maximum. Now again, if we refer to the examples, let's just take the downside scenario. 30,000 miles per vehicle. Let's just use a nice round simple number. It's probably going to be higher than this, at least initially, but let's just assume it's like $1 per mile and 30,000 miles. So we're talking $30,000 in potential revenue here. And again, this is a downside scenario. Tesla themselves would take $7,500 pure profit on that, just a cut for providing the platform. Another way to think about this is let's multiply that by a fleet. Let's just say 1 million vehicles. Keeping in mind there's over 6 million vehicles on roads that are produced by Tesla today, already 6 million. In this downside scenario, there'll be an extra $7.5 billion straight to the bottom line. The numbers on robotaxis get extremely ridiculous, extremely fast. The assumption we just used then, right, was $1 per mile, 30,000 miles per robotaxi, 1 million What if it's $2 a mile? Double those numbers. We're now talking 15 billion bucks. But what if instead of 30,000 miles, the average robotaxi is doing closer to double that? Imagine the extreme scenario. We can double that again. We're now talking about $30 billion of profits from a fleet of just 1 million Tesla robotaxis doing 60,000 miles each at $2 a mile. Madness. Now, I'm not sure if ARK's been copying my homework or I've been copying ARK's homework here, but I have the same section in my own Tesla valuation model, which you'll find on Patreon at the investor level and above. Click the link at the pinned comment. Better yet, build your own. Or just download ARK's. No, but seriously though, you should build your own either way. What we're looking at here is an ASP table for electric vehicles, not just Tesla specifically, but we're looking at total addressable markets, and then they're referring to each vehicle that Tesla either already addresses in each segment or could. We're going to start at the bottom here. The total addressable market segment for the SNX is less than 2 million vehicles per year. That's at an average selling price of $105,000 a pop. E.g. Model S and X. The maximum units Tesla would capture of this in their upside scenario, $225,000 a year. The Model 3 at $45,000. Total addressable market, just over 11 million vehicles. Their assumption there, Tesla maximum units per year, less than 1.4 million. Model Y, assuming a $50,000 ASP. This segment, total addressable market, 13.5 million. Maximum units Tesla might sell, they believe, less than 1.7 million units. We're now cumulatively at already 3.3 million vehicles. In other words, about double what Tesla delivered last year. The Cybertruck with an ASP globally of about $80,000, total addressable market there, less than 3 million. They believe Tesla's share of that, 350,000 max. I think they're probably underestimating this. And now the next gen vehicle platform with a $25,000 average selling price, 30 million total addressable units. They believe Tesla's share of this could be around 3.75 million. For context, combined Model 3 and Model Y, 3.075 million max Tesla units. I personally believe that ARK are massively underestimating the maximum number of units Tesla could sell in the $25,000 range. And I mean massively. They're off by like 3x, in my opinion. However, at a $15,000 average selling price, suddenly we have a total addressable market of 100 million units. I didn't misread that. 100 million units. Why? As I've said before, a linear decrease in the price of a vehicle causes an exponential increase in the number of people who can afford it. Once we get to the $15,000 range, you've covered basically the entire automotive market in the developed world. They believe of this 100 million total addressable market, Tesla could do 12.5 million. Now, cumulatively, we're looking at 20 million units. Sounds familiar. Didn't Tesla tell us that they're aiming to produce 20 million vehicles a year? By the way, this next gen vehicle will occur. Personally, I'm estimating something, an average selling price of around $18,000, give or take. Again, you'll see that in my valuation model. ARK are a little bit lower, but the same principle applies. The difference between $25,000 and $15,000 is enormous. And here's where things get ridiculous. A micro mobility EV with a global average selling price of $7,000, the kind of thing that would blow over in a stiff breeze. You know what I'm talking about? Yep. Total addressable market, 10 billion units, like literally a 1-to-1 ratio of these things to humans. Of these, Tesla could literally do 1.25 billion units. And cumulatively, we're now talking about essentially 1.25 billion units, this micro-mobility thing completely carrying. And we're now looking at an $8.75 trillion opportunity just from those. Combining everything, we're now talking about $10 trillion. So in short, ARK believes that just the automotive business for Tesla, not even autonomy, could be almost $10 trillion of opportunity. Not bad. ARK have also provided a table around ride hail. In blue here, we've got total possible Tesla miles, and then you've got the entire miles for the entire segment. The long and short of it is this. The more affordable ride hail is, the more miles will be driven. No shit, Sherlock. Just like the more affordable a vehicle, the more people can afford them, right? Money matters. The difference between 25 cents a mile, $2 a mile, and $4 a mile is enormous. Over time, I believe that Tesla ride hail will start on the higher end, comparable to Uber or Lyft, maybe a couple of bucks a mile, right? But over the long term, I think this is going to go down and down and down and down and down. And again, I have this in my valuation model. A steady decline from around $2 a share, depending on the scenario, throughout the decade and beyond. The cumulative market size at each segment, in terms of price per mile, 25 cents, we're looking at an $11.274 trillion opportunity. And ARK estimates that autonomous driving could triple total miles traveled globally. Now, at 50 cents a mile, that's about half the opportunity. Twice the price, about half the opportunity. At $6.274 trillion. At 60 cents a mile, a tiny difference. Suddenly, we're now at $3.5 trillion rather than 6.274 or 11.274. At $1.10, just over $1 trillion. And at $2, look at this, almost a 10x decrease, $134 billion. This is roughly the price of Uber and Lyft today. ARK including estimates for robotaxi penetration, presumably percent of all miles driven. In year 0, 5%. By year 5, 62%. Now consider this for a moment. Just imagine if the number of total miles driven in autonomous vehicles goes from basically nothing to more than half of the entire global market in terms of miles traveled in a 5 or 6 year period. Just imagine if that happened. What that might do to the valuation of a company like Tesla, who's providing many of those rides. Now we're going to take a quick peek at the Monte Carlo single simulation. This is basically one of the many thousands of different simulations conducted, just to show you guys what things might look like. This set of figures produces a stock price for Tesla of $3,701 per share in 2029. Remember, the base case is $2,600. This is $1,000 more than that. These are the assumptions in that model. Autonomous EBITDA margin, 62%. A fairly fast production rate increase. Miles traveled per robotaxi, close to 130,000. Now, the way you would get to this figure is think, well, average taxi does about 50,000, but that's based on typical 40-hour work week or so. Robotaxi can essentially operate almost 4 times as much, so 3 or 4 times that number. That's how you get to roughly 130,000 miles. The launch year for robotaxis in this particular simulation, keeping in mind, by the way, that each of these figures varies. They're not all attuned to be in line with one another. This is a 2026, let's call it end of first quarter, early second quarter, 2026 robotaxi launch date. And we still got to that $3,700 per share figure. Regarding margin assumptions, despite Wright's law, every cumulative doubling, blah, 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 you've heard that thing, right? Margin never exceeds 41%. This is with a 10% penetration for each vehicle segment Tesla enters. Just 10% market share. This assumes that 23% of vehicles sold in 2029 have Tesla insurance. This also assumes a human-driven ride-hail fleet per year, basically in line with a typical taxi. So, I mean, this is extremely reasonable. If taxis do about 50,000 miles a year, why wouldn't a Tesla taxi do the same? With a 33% cut of the profits. Now, onto the autonomous ride-hail assumptions. This assumes a 22% platform fee. In other words, Tesla takes 22%. There's also some assumptions for Optimus, but not necessarily sold to customers, but simply how much will this reduce Tesla's labor costs in their own factories producing their own vehicles. In this scenario, Tesla produces 21.5 million vehicles in 2029. Their fleet totals a little under 60 million vehicles in 2029. The average selling price is $20,156 in 2029. This is an extremely important figure that I also track in my own valuation model. And just for context, this is actually above my bull case, not above my hyper bull case, but above my bull case, which as I record this is under 50 million units in 2029. Base case obviously meaningfully lower than that. The hyper bull case meaningfully higher than that. Actually, let me just double check here. It's not that much higher, 60.7 million, and the bear case less than 30 million. But this is really important to track because think of the software subscriptions. Revenue from Tesla's electric vehicle business only, $434.5 billion. Gross margin on the vehicles, 6%. Again, this is a huge mixed bag in terms of different scenarios. Every figure here, this is the whole point of the Monte Carlo. Seems absurdly low to me, but hey, what would I know? They're also tracking the price of Bitcoin. Check this out. Look at the increase from 646 to 246,000. Wow. Percent of Tesla vehicles sold with insurance, not including the ride-hail vehicles, 23% in 2029. Now, the autonomous ride-hail business. Fully autonomous capable fleet, 47.5 million vehicles. In other words, Tesla's well and truly solved autonomy globally by then. They're assuming 29% of Tesla vehicles in China, operating as robotaxis, and 25% outside of China. So 1/4. Again, this is also an important thing that I track in my own valuation model, and you guys should too. Now we've got the combined ride-hail business, human-driven and autonomous. $1 per mile, $1.3 trillion in ride-hail billings, a 62% EBIT margin. Total EBITDA on this, a mere $607 billion with a B, billion dollars profits. Now, just for context, Tesla's entire current market capitalization today is about the same as this, which would mean Tesla has like a 1x multiple on that. Just assuming that Tesla was in 2029 and had a market cap, it'd be a 1 times multiple, as opposed to a 30, 40, 50, 60-ish times multiple on those kind of numbers. They've also got some energy in there, but it's not a huge needle mover here. Optimus also factored in, but again, not a needle mover, too early. And now, everything consolidated. Total gross margin, 57%. Total EBIT margin, 40%. A market capitalization of a mere, let's just round it up, $13 trillion. Stock price, $3,701 per share in 2029. Now, this isn't ARK's expected value for Tesla. This is one of the many thousands of different simulations that went into producing their fair value assumption. But this is the best way, in my opinion, to value any company, probabilistically. You can't just assume, okay, this is the only possible scenario, that's what I'm going to assume. Right? That's dumb, because the future's unknown. Instead, you really got to be weighting a bunch of different scenarios by probability. And obviously, you don't know the probabilities and you don't know the scenarios, but surely that's a better approach than just assuming you've got a time machine you can predict the future accurately. Now, let's head back to ARK's expected value, $2,605 per share. We have revenue by business line in their expected case, roughly 1/4 from the electric vehicle business, roughly 2/3 from the robotaxi business, and about 10% from stationary energy storage. In other words, about $650 per share from the electric vehicle business. Call it about a tripling. I mean, yep, cool story, bro, whatever. And over $1,600 per share from the robotaxi business, and roughly $200 a share from Tesla's stationary energy storage business. As I showed you guys in the intro, this is what ARK's fair valuation for Tesla looks like visualized by 2029. No one believes this is going to happen. Well, ARK does. A few of us do, but widely speaking, nah, that would never happen. That's impossible. As if that's ever good. No, not possible. How could a company possibly accrue so much value in such a short span of time by printing insane amounts of money and growing at a phenomenal rate? I mean, that's crazy. That's roughly a 13x increase from about 200 to about 2,600. That's about 13 times. That's insane. That's never happened before over 5 years. Impossible. Wait, what's this on screen now? NVIDIA, last 5 years, $4.11 in June 2019 to $123 in June 2024. Let me just do the math on that real quick. 30x. Oh, so I think we have an example here of a company doing double, literally double that over the same time frame. So I mean, I guess it is possible that a company could do that. Here we have NVIDIA over the last 1 year, starting at $42 a share and now 123, a tripling in a single year. And I mean, on screen now, you guys see that, right? Some similarities there, right? By the way, check this out. The actual crash on NVIDIA, hilarious. Look at this. Down close to 70% from its peak in 2021 to October 2022, down almost 70%. And then that out of absolutely nowhere. Fancy that. Saw a similar pattern, a similar decline over a similar time frame for Tesla stock. How curious. In conclusion, this is episode number 6,472 of me saying, don't sleep on robotaxis. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. And I haven't missed a daily video in more than 3 years. Must be a coincidence, right? Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1 year supply of vitamin D3 plus K2 and 5 travel packs. But don't take my word for it. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. By the way, viewer, that makes 2 of us. On to the next. Just got my AG1 in the mail. Legit feeling the effects after day 3. This viewer's been taking AG1 for 8 months and says, what an investment. Another. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR or I can keep going. Plenty more to come. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, These are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. If you're still skeptical, hey, I don't blame you. Everyone on the planet seems to be promoting AG1 now, but guess what? They weren't nearly 3 years ago when I had this to say privately to my Patreon audience before there was a relationship, when I was asked about what I was doing for my health, energy, and so on. Just sharing my genuine, honest thoughts about a product I'd recently discovered that was at the time called Athletic Greens, now AG1. If I could only recommend one supplement to take, Athletic Greens, and I'm not getting paid to say this, Athletic Greens is a fucking game changer. I cannot believe how effective this is. No longer having a lack of energy in the afternoons. It's fucking amazing. There's only one thing to recommend seriously. Try Athletic Greens. You won't go back. So obviously, just like Elon Musk is a liar, a fraud, a con man, a scammer, a fake engineer, and Tesla's going bankrupt, you shouldn't trust that guy from about 3 years ago who, without any financial incentive, was promoting this product to his audience on Patreon when they were asking about health and what he's doing for supplements. Because obviously, there was some other reason he recommended that, obviously. Not sure what it was, but don't trust that guy. And all the testimonials, like my mental game's improved with AG1. I feel better than ever. I'm so impressed I've bought it for both my parents. I feel more focused and have better digestion. Incredible difference. No more afternoon fatigue. It's relieved gut issues. These are all just obviously fake testimonials from fake people. Right? Wrong. Just try it. Unless you hate yourself. If you hate yourself and you don't even want to risk possibly feeling better, this is not for you. But for everyone else, what's the worst that could happen? Try it for a month. See how you feel. It's a no-brainer. Just click the link in the pinned comment or head to drinkag1.com/SMR. You'll get a free 1-year supply of vitamin D3 and K2 plus 5 travel packs. And you'll take the colossal risk that maybe you might have a similar experience to some of the people whose testimonials we've read in this video.